So,
Target rich
folks,
environment.
we are completely live today, like every day. It is 11 a.m. sharp East Coast hours, Friday, August 1st. Let me read this disclaimer before we get rolling. We are not financial advisors. The content presented today is for educational purposes only and merely cite our own personal opinions. In order to make the best financial decision that suits your own needs, you must conduct your own research and seek the advice of a licensed financial advisor if necessary. Know that all investments involve some form of risk, and there is no guarantee you'll be successful in making, saving, or investing money, nor is there any guarantee that you won't experience any loss when investing. Always remember to make smart decisions and do your own research. And today is a day where we should talk about risk. Dumping
Wait,
bad news on a
wait, we're
Friday.
we're not guaranteeing anybody's success. What is this? That's
we,
that seems to
we'll
go
get.
that seems to go counter to a lot of the clients. I mean,
we'll
even though we say it all the time, people tend to get really upset when things don't work out. I mean, days like today are just humbling, right? I mean, you got to be careful. You got to control your risk, as Ezra's sitting here talking about. I mean, if you're sitting there and you're having a really bad day, you you got to reconsider what you're doing here. You got to have a plan. Days like this are going to happen, and this is a relatively benign day compared to what's probably going to come down the pipe in the not so distant future. So
You
you
want to
need to
get a little
keep it
more
in check.
specific on that, Jeffrey? You see a big downturn coming. When do you see it happening?
I mean, we're due a 500 to 600 point move on the S&P 500, and just after coming up as as big a move as we did off that Liberation Day dip in April, I mean, we are due a pretty major correction on this thing to set the tone for going into the end of the year and the beginning of 2026. And if we don't do it, it just prolongs. It's going to get to be more like an 800 to 1,000 point potential correction that we'll see eventually. And I mean, it's just like winding up a spring. Eventually, it's going to pop. And I mean, it's just the way the market works. Like we were
Well,
setting we're
another
setting a
thing,
record for the number of days above the 20-day moving average,
yeah.
for the 21st century. And that may come to an end today. Of course, we could recover it and close above it by the end of the day. We'll see what happens.
Well, and that's another thing is, I mean, the market's moved up on what? That's my question. I mean, they say, well, we got these trade deals. Well, there's nothing on a piece of paper. I mean, it's just a handshake. I mean, they can come back in 6 months and go, yeah, we didn't have a deal on that, and it's gone. I mean, that's the thing about this market that I can't believe where we're at. I mean, expecting a different move than, I mean, a move down, but kind of for a little bit different reason than what Jeffrey's been saying. I mean, yeah, this thing's gone way up on what? That's my question. I mean, there's nothing out there to back it up, in my opinion. And I mean,
Sailboat fumes.
yeah, I mean, and it is. I mean, they're going up on nothing, and so when they find out, well, there's really nothing, then there's no bottom underneath it. I mean, it's just gonna implode. And I mean, we took out, I mean, we went down and hit, I mean, July's open today, woo woo. I mean, so we start out where we're July, but they kind of bounced off of it. But I mean, they get below that, and really there's no support until you hit 6,100. So, I mean, that's the thing about this market. It shot up at the end of June, and then we've been, climbing a little bit higher and higher and higher. But especially since April, I mean, they overreacted in April. That part I get. So they take it back up to where it was. Okay, fine. But now that where we're at, I mean, I think we've been really, really, hitting highs with nothing behind it. And I mean, I was kind of warning people, hey, you might want starting to buy some SPY puts up here. I mean, just go out a ways and just start buying SPY puts, just because I don't think this thing is going to last. And today is kind of helpful. I mean, this is, what is it, Liberation Day 2.0 here. Nobody knew we were going to have tariffs coming out today, right? So, and that's all they were saying, that we're going to have all these tariffs coming out. So it's not really the tariffs that's bringing it down. I think they're using it as an excuse to correct the market a little bit. Now,
It's,
they 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 dump it off, they bounce it a little bit. There's probably more downside. And I mean, this month in August is usually kind of a down month anyway. I mean, look at what happened last August. I mean, Nvidia, everybody's sweetheart, just died in about a what? 3, 4, 5 days. And I wouldn't be surprised if August isn't just down for the next couple of weeks. I mean, it'd be healthy for it. I mean, I'd like to see us go down to, somewhere around 5,800. So, and I think that'd be good.
All right, folks. So you got it from Geof Smith, some SPY puts, maybe as a hedge, if nothing else.
Oh
I'll
yeah.
look at some pricing. Looks like we got a great crowd here today. We want to hear from you. Do you guys agree with the doom and gloom? We're kicking the event off. Welcome to everyone tuning in. And hey, especially if you're new to the event, we want to hear from you. Say hi in the chat. Let us know who you are. Let us know where you're tuning in from. Let us know if you agree with the doom and gloom. I will set it
Well, now hold on.
here.
I'm not doom and gloomish. I just think it ought to correct. I think this market can go higher. It just needs to take a breather for a little bit and just dump off and get everything just kind of, settled out a little bit. And then
Going
everybody can
down,
start
like
thinking.
going down's healthy. I mean, I'm a trend pullback continuation trader. With no pullback, there's no entry. Like that's been the hardest part for me is, a market with no pullback gives me no opportunity to get in again. So, I mean, I need that high probability
Beverly,
setup.
Beverly in the chat is asking any specific SPY puts you recommend.
Right now, I'd probably go out 6 weeks to 8 weeks, and I'd go. I mean, you're gonna have to look at a really long option chain. I always like to find something somewhere between $1, $1.50 on the SPY, and just kind of load up on those. You can get, I mean, 5 or 6 of them, and just kind of let them hang out. They cost you $500, and it's just something to just hang out there. And if this thing really dumps off pretty hard, it'll pay you really, really well. And if it doesn't, then it doesn't cost you all that much. It's insurance. I mean, that's all it is.
Yeah. And that's
And
But
assuming, a certain account size. So whatever you're kind of long in your long-term retire, I'm sure you guys like me hold a
yeah, I
bunch
mean,
of SPY long in
if you
your
want to do the math on it, I mean, it's about 2 SPY puts for every 50 grand in an account if you're wanting to kind of look at it that way. And there it is. But I just kind of grab some and say, there's my insurance. If this thing dies, it dies, and there it is. And another thing that you can do, and this is kind of what I do, is once you get up 100% on them, take half of them off or 2/3 of them off. Now your whole trade's paid for. And if it doesn't do anything, you don't lose anything. If it keeps going down, you still make money on it. But when you get into a down market, I always go out about 6 weeks, and I'll wait about a week or two, and I'll go out and find some more about 6 weeks out and get some more of them, and I just start loading them up. And before long, all I'm trying to do is protect all the stocks I have. I mean, like, it's just a protection. But I mean, and it could end up paying you a whole lot. I mean, it happened great back in April. I mean, I just kept looking at this market when we started out in February going, I'm just going to start loading up on puts on everything. And it worked out great. I mean, Liberation Day came along. You start covering those things when they start bouncing back up. You make a lot of money, and now here we are making new all-time high. I mean, think about it. Fed Day, we made a new all-time high in the S&P. I mean, dang, that was just a couple of days ago, and here we are back down to almost 62.50. So, I mean, they dumped that thing off 200 points real fast.
what strike price specifically, Jeff, would you say?
That's going to be somewhere around the four. I'm going off the top of my head. I don't have an option chain in front of me. I'm going to say it like somewhere between 440, 450. Is that right? Or is it 540 and 550? I don't keep
probably
up with, I watch
540,
the
550.
S&P real well is what I do. Let me pull up an option chain here. What the heck?
Just knock off a zero. You got the, so we're basically SPY is basically 10%.
Yeah, exactly. So
Ezra, for those that were here on Tuesday,
yeah, 500s. Yeah, 500, 550, right around in there somewhere.
Ezra, my Apple play from Tuesday up about 30-40% today.
Nice.
Awesome.
And I was targeting a 14x, so this is just getting started. But if you are happy with that hedge play I threw out there on Tuesday, it was timely.
Did anyone get in on that? We love hearing winning stories from the chat. So keep paying attention to what we'll talk about today. We got a few cool trades to share. Jeff has some infrastructure tickers we're going to highlight, and then I have a falling knife I like as a macro play. But so how about this slide up here? U.S. hiring slows sharply. This, in combination with that tariff news, is banging up the market today. Any thoughts on these job numbers, gentlemen?
So I want to know who stayed up from midnight till 8 this morning putting those numbers together so we could have that. I mean, the month ended at midnight, which is like, well, early in the morning, West Coast time. And who got all those reports pulled together? I mean, no companies were even required to report their hiring or firing, for the jobs. It's so ridiculous. This number is just completely just mythical, made up for July. I mean, nobody got those real numbers. So this is going to be revised many times down the road. This is just, the paper number at this point.
Throw a dart and see where it lands and go, that's
Yeah. Was it? I think it was just yesterday we were banging on economics numbers, and of course, Thomas Carlyle, the English philosopher, famously said, economics, the dismal science. So, and it's what's a more recent cliche? Garbage in, garbage out. So,
Mhm.
not only is economics kind of suspect on its own, but the numbers going in, we don't really trust. Barry in the chat says he did that Apple spread and it's quite promising. So, nice work, Jeffrey.
Yeah. Awesome. Just, protect and book your profits. Just make
Yeah.
sure, like, don't just.
Well,
Yeah.
one of the things, and I agree with Jeffrey on this. I mean, when I looked at the government payrolls, it was just minus 10,000. That sounds about right. I mean, that sounds good. We'll just put that one out there for right now. I mean,
Nice round number.
yeah. I mean, it could have been 20, it could have been 5, who knows? We'll just put 10,000, we'll just call it good.
So, of course, oops, going, okay, yeah. So, of course, with the weaker job market, we might get some good news in terms of rate cuts. If you think rate cuts are good news, frankly, as much as I hate to say it, I think Powell is doing a good job holding the course. But a heavy part of my portfolio is rental real estate. So, just out of personal selfish desire, I would like to see some lower rates. I'll need to do some refinancing next year, and honestly, might be fun to talk about. So me and Alex, you guys in the chat, of course, know Alex. He's here every day. We have a portfolio of local rental real estate, and so from one perspective, it's nice to be really well diversified, and they've done well on paper, but the rates have just banged up real estate. I mean, I'm seeing the condo market's about the worst it's ever been, at least since '08. And certainly single family homes are banged up, and as well as our a portfolio of small apartment buildings. So again, they're doing fine on paper, but this rate environment has made things rough. Do you guys do anything in real estate?
Well, I mean, farmland is what I have. I think Jeffrey's kind of in the same boat on that. I mean, I do cattle on one, and I do grains on another piece that I have. But as far as going out and doing rent houses and stuff like that, it's too much of a headache. I'm not going to get into that stuff. So, but I don't. I mean, the question I have is, so what excuse do you have to cut rates? I mean, that's an honest question, by the way. I
Well, I
mean,
guess the excuse is the job market, but
well, okay, but you still have inflation going up, right?
yeah,
So, I mean, the only way to hedge off inflation is to do what? Raise rates, right?
raise rates. Yeah,
Right,
it's certainly
exactly.
not lower them.
I mean, and
Mhm.
and everybody says, well, inflation's going down. It's not going down. It's just slowed down. It's still going up. We're still going up at the rate of 2.5%. And I mean, so there's really nothing out there that says, hey, we need to be cutting these things. The economy's still doing well. We're still creating jobs. We still have positive CPI, positive GDP, positive, PPI. I mean, everything's inflationary. The only way to fight it off is to raise rates. So they shouldn't have been cutting them to start with, in my opinion. They started way too late to raise them.
Yeah.
So I don't see where they can actually come out and say, hey, cut rates. And Trump saying they need to cut rates. Well, he's in the same boat you are. He's in real estate.
Yeah,
He's got
Right.
a
I mean,
touch more than me.
yeah, exactly. So I mean, of course, everybody wants lower rates in that arena, but I don't see how they can cut them. Now, if they cut them, they cut them. I'm not the Fed. I don't care what they do, but I just don't see an excuse to cut them. In fact, they shouldn't have been cutting them before the election. They should have just been keeping them up or raising them some more. And I think that would probably help the economy a whole lot better and really kill, the inflation, that we've had. I mean, we had
Well, and
huge inflation. And
of course, rates are only one part of the puzzle. For mortgages at least, which are really most sensitive to the 10-year Treasury, which
right.
has a lot to do with government spending, and that one seems unsolvable. Like at least rate moves or something we could do. Government spending less money. I don't think that's possible.
Right.
and the kicker here. I have a whole bunch to say in this arena, actually. um, Ezra, in case you didn't know, my family business is civil engineering. We design real estate projects for people, subdivisions and commercial projects, and
I didn't know that. Yeah, we'll have
yeah.
to talk shop sometime.
So my schooling and education is actually civil engineering, and so I have a lot of builder clients. They're laying people off right now, and they're really concerned. They've been talking to me. They're like, how bad is this going to get? I'm like, this could get a lot worse. I'm sitting here looking at the numbers in the background. The U.S. has like over 5,000 banks. In case you didn't know that out in the crowd, about 30% of those banks have commercial real estate exposure greater than 300% of their net equity value. Think about this a minute. Now, commonly held, there's about depends on whose numbers you look at, between $5 and $12 trillion of commercial real estate that needs to be refinanced between now and the end of 2026. All right, this time this time bomb is ticking at this point. What happens if rates stay high? And a lot of these banks are punting on foreclosing. They don't want to foreclose on these because that real estate is probably, with all the rhetoric and all the stuff, demand for commercial real estate is kind of low, especially because it costs so much to finance it. So where's your new buyers? You're going to have to find cash buyers, or you're going to have to take a hit due to the rates. Trump's beating on the rates because he's, as Jeff said, in commercial real estate. He knows this problem's sitting here. These projects need refinanced. They're, getting punted on being foreclosed on. But at some point, this is the exact same story we had in 2007-8, except it's shifted over to commercial real estate instead of subprime real estate. So potentially a much bigger problem, could be a much bigger potential blowout. What's the final straw on the camel's back? I don't know. Maybe the wall we hit mid 2026 when banks are essentially forced to start foreclosing. This is a problem, and I don't. Now, the thing is, if we cut rates due to the way the treasuries and everything work, if there's less demand for treasuries, that means the mortgage rates actually go higher. So even if we cut rates, maybe it has the opposite effect in the market, and actual real rates for refinancing things go higher. And this is a real problem that just can't be fixed by changing a number on paper. So it's one of those things that the Fed doesn't set any kind of rate that actually affects the real market. All they said is the overnight borrowing rate between banks. That's sure, everything is kind of built off of that foundation, but that doesn't actually affect any consumer or commercial or anybody actually borrowing money back and forth in the real economy.
All right. Well, there you have it. A warning from Jeffrey, folks. What do you think? Anyone else in commercial real estate or concerned about it? Yeah, Bugs in the chat says very key point, Jeffrey. So there's a little more doom and gloom for you. And then, we're not slowing down. So we talked about it a little already, but tariff terror. That was Jeff's line. I got to give you credit. President Trump dropped a bunch of more tariff bombshells. That's the other part of what's banging up the market after those job numbers. So hike tariffs on Canada 35%, baseline minimum rate of 10%, across all other partners, with a start date of it August 7th. Now, these start dates seem to not have a ton of weight behind them. They seem to keep shifting around, but yeah, more tariff news that the market's not liking. And SPY, I have it up right here, is down about 1.5% right now. And let me move this so I can see that. Yeah, Nasdaq down over 2% right now.
Well, I think another thing, I mean, he went out and, threw 50% tariffs on copper. I don't know if you saw copper. I mean, copper got hammered pretty good. But if you go back to April 2nd, when the first one came out, copper dumped off about, what was it, 26% or so, just because he changed the tariff from copper that he was extending out into September, and he threw that back to like, July 1st, and then he kind of bumped that a little bit. And then he comes out and says 50% no tariff on what is it, partially refined copper, I guess is the way they put it, which really tore up copper again, and it went down again 25%. So, but to me, that's a good thing because it skyrocketed up and made new highs, almost hit $6. I mean, that's crazy. and in Jeffrey's industry, copper's a big thing. So
I was gonna say, yeah,
yeah.
tell your
So
builders to post some
yeah.
security on the job sites.
Yeah. So, but
I don't usually deal with the wiring, but it is part of the.
But that's the thing. It dropped off 25%, which is great. So I'm waiting for it to consolidate a little bit in here and probably buying some CCJ and FCX and stuff like that as it tries to kind of push back on up again.
Yeah, so
With
copper, just real quick, Jeff, down 23.7% over the past 5 days. It
yeah,
is creeping back up today a little, 1.3%. Number
yeah.
I'm seeing is 441.
So, and I mean, that's the thing. I mean, the copper really got hit hard. It had its tariff, no terror, a couple of days ago. Now, I think you can consolidate down in here around this 440, 450 area. And if you can get back above probably the 460 to 470 area, probably a good place to start getting into some of your little copper stocks and stuff like that. See if it'll go back and push back above $5 and take back off again.
All right, so Jeff, you're long copper. Let me put that in the chat. Long
Patiently.
copper,
Let it consolidate a little
patiently.
bit down here.
Yeah.
I mean, sometimes, the S&P will yank everything else down, so watch out for that. I mean, even if you look at today, I mean, well, heck, let me just kind of show you this. We look at other things. I'm going to take your screen real quick. I mean, on the left side here, this is the dollar index. The dollar index has actually been kind of moving back up, got back above 100 yesterday. And then when the news came out this morning, they just killed the dollar. I mean, it dumped off. And of course, when that happened, if you look at, gold has been correcting back from its all-time highs. And of course, gold shot up. And this is a great inverse relationship you see a lot of is strong dollar, weak gold, weak dollar, strong gold. Doesn't always happen that way. Sometimes gold will tie itself to crude oil or bonds. But right now it's watching the dollar index pretty heavily. So today, when the dollar dumped off, gold just flipped around and shot up about 1.5%. And so, which is great. I mean, if you're in, our little gold stream alerts and everything like that, we got into a trade yesterday, got out today. Love day trades, right? So, but that's the thing. I mean, that's what you'll see a lot of times when you get these economic news is, you'll get these inverse relationships. And, gold, I mean, sorry, that's not, that's the 6A. That's the euro slash GC. There's gold. Now, chart looks the same, but anyway, but that's the biggest thing that you'll find is you'll see a lot of these inverse relationships. Gold got yanked back. I mean, talk about correction markets. I mean, you got copper and gold and even silver. I mean, think about silver. Silver was almost above $40. It got just shy of it. Now they've yanked it back down. And I think it's healthy for these markets to do that. Now we just kind of wait for them to kind of consolidate down here and start breaking up a little bit. And all of a sudden, You have nice little trades in these markets. The indexes, they still have some room to move down, in my opinion. And they haven't had moves like this. Now, granted, a 25% move in copper, I mean, 25% move in the S&P would be pretty substantial. But I mean, if at least it did 7 to 10%, that'd be awesome. So, but it is kind of a neat little chart. And if you want to look at how copper did, here we go. And I'll flip this over to a daily here. You can kind of see back over here, here's your April dump off, which was about the same percentage as you had on this dump off here. So even though it's bigger because percent wise from that high compared to that high is different, you're still having that same 25-ish% dump off, but you can kind of see they consolidated for about 2 or 3 days. Then they just started floating back higher again, making new all-time highs. So the question is, can we consolidate in here around this 440, 430 area, and they can start building in some support, and then they start breaking back out again and start moving back up. And that's what I'm kind of being patient, waiting on to see if that happens. Now, it's not to say that this thing won't go down and retest that, $4 low. But I think as long as it stays above that $4, copper is going to be taken back off again. So, but anyway.
And we'll get Jeff has a really cool gold strategy to share. I think 31 out of 31 trades.
Yeah, I'm trying to catch up to Jeffrey. I mean, he's got a program that he's bulletproof in over there. And so
86.
Yeah. And so I've gotten real jealous of that. So I'm trying to catch up to him. So I'm at 31 out of 31 right now, but I got a ways to go. I got 54 more to go. 55 more.
So stay tuned, folks, because we'll get into that after we hit a few more points. But yeah, Jeff's going to share a really cool gold strategy that's been crushing it. So we will get into that shortly.
Yeah.
But before that, let me get this going. So the Figma IPO, did you guys get in on that?
I don't chase IPOs because 95% IPOs are bearish and will eventually make a lower low than the IPO price.
Yeah, I think it ripped like 200% for people who got in like instantly. But yeah, that's a tough putt. I know we had some people in the company saying they did get in on that, but yeah. And so, any thoughts on Figma? You think it's coming back down to earth?
Oh, I mean, today, tomorrow, next week, I don't know. It's going to make a low 95% chance it makes a low lower than the IPO price. And
right, so.
some of those are substantially lower. Like just pull up Beyond Meat and look at that chart. It took a little while to run out, but now it's substantially below that IPO price. So it just plays out. It's just plays out over and over. It's just a recurring pattern in the market.
I'm just philosophically opposed to Beyond Meat. You know, I live in Colorado and cattle country and love getting my steaks from local ranches. And yeah, the fake meat, I just philosophically opposed. You think there's any room to short the Figma IPO, get a put on it or anything, or just they're probably super expensive, I would think.
It's unlikely they'll have options for a few weeks anyway. That's usually the CBOE usually runs several weeks behind. I can take a look, but usually those options aren't available for a little bit after
yeah,
an IPO.
Jim in the chat says, me too. I have food background and cannot see the support for that company. So yeah, I mean, Figma is just sort of a like kind of Adobe also. It's like, yeah, I don't really see the case for a massive Figma valuation. I mean, obviously they're doing a lot with AI. Everyone is, including us. But yeah, I mean, there's nothing earth shattering about Figma, I think, to justify a massive valuation. Holly said she couldn't get Phil yesterday. Holly might have been talking about Jeff's gold trade. Holly, if you want to post some more context in the chat, happy to address that. Of course, these markets move fast. Today is an example of that. All right, so the Figma, congrats to anyone who captured that initial IPO pop, but yeah, we're not loving it. Maybe not a great opportunity to short it either. So just stay away, I think.
Yeah, there's no options available yet, so that'll be TBD.
Another thing is I mean, especially as I'm kind of a technician. I know Jeffrey is also. there's no history on the thing. And not only that, I mean, you look at, IPOs. I mean, I avoid IPOs like the plague. I don't care who's coming out with what, but and I know a lot of people love them, but and of course, if you can get in, at $50 and you're up here at 127, you're awesome. But the thing is when you start looking at these IPOs, and I agree with 100%, they usually die off. I mean, you really have no history on them. I mean, again, this thing's gone up on what? Enthusiasm, awesome. But once their earnings come out in a quarter, are they any good? And odds are they won't be, because they're too new to understand the politics of earnings and how to cook the books and wiggle and waggle and everything like that. So, and look at what happened to Facebook. Facebook opened up, shot up, right? And then immediately died off because, well, their earnings sucked. And it did that for a couple of quarters. And finally they figured out, oh, we need to do it this way. And all of a sudden they turned back around and started moving back up again. And that was, I mean, and it did. It took them, a whole year almost of earnings to finally figure out how this thing works out. And they started making good earnings, and all of a sudden they started making money, and everybody started buying them, and they went, way, 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 way up from there. Of course, then they changed to Meta, and there it is. So, but I mean, all those companies have that tendency of doing that. They just don't know how to do the earnings yet. They're just trying to do the books the best they can, and there it is. So,
All right, folks, I'll put this in the chat. Stay away from Fig. At least it's got a fun ticker. Fig, F-I-G. That's a memorable one.
I use Beyond Me because the example was, everybody thought it was bullish because we took off from 50 up to where we topped out at 200. But then, as you can see, you're coming into 2022, this one, hasn't looked back, and the prospects aren't great. Public opinion on it, not great. So, I don't know about lab created meat, but just from a stock price standpoint, it went bearish, very, very bearish. So,
yeah, I mean, meat alternatives, that feels like something for a very frothy market, for a very all-time highs, people super confident, which I guess we have flirted with all-time highs, but it does not feel like the mood is ready for frivolous stuff like that right now.
Yeah, and Jeff's example right there, Meta, IPO'd and then immediately went bearish. There was no real rally at all on that one. So,
yep.
That's just 95% of, there's only that 5% of people that, it's like they say some people are born with it. There seem to be these 5% of CEOs that take a public company that actually know how to play the game and are good at managing stock price and keep it going. 95% tend to learn the, lesson in the school of hard knocks. So,
yeah, or watch their predecessor learn it after they get removed by the board. So, Jeff, before we start the event, you said you had some infrastructure stocks on your radar. I put the tickers up on the screen there, ITT and XYL, a little outside my wheelhouse, but what are you looking at, Jeff?
Well, water. How's that? I mean, 80% of us are made of water, right? So,
just 80%, or are we 80% water?
We're 80% water. I guess everybody else is an alien of some sort, cyborg. But no, but 80% of people, the human body is made up of water, and of course everybody needs water. But one thing I've been kind of watching as far as infrastructure stuff, everybody looks at steel and concrete and wood and all this stuff, and I do too. But they need water a lot, and there's always a shortage of water somewhere. And I've been watching the XYL for a long time. It's just been, I mean, it's a great thing just to kind of sell puts or sell calls on, and just goes across. But it finally kind of broke out a little bit. On the other side of that, you have ITT, and XYL basically does water infrastructure. They do all kinds of the piping and the metering and blah, 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 and all that. ITT is a little bit different. It does pumps. And it's not just a pump, a sump pump that's maybe in your boat or whatever it is. These are huge pumps. I mean, this is like the pumps that New Orleans uses for their infrastructure there, because they're sub sea level, and they have to pump all that water out. These are huge pumps, and these things are used in all the municipalities and stuff like that as well. So you have the people who are making the water, the people who are making the pumps, kind of both of them put together. And you'll notice they're starting to kind of break out a little bit. And I think if we start putting all these A, nuclear plants in, and B, all these AI data centers in, yeah, air conditioning cools them, but a lot of those processors are cooled by what? Water.
Water.
Exactly. So they've got to put a lot of water infrastructure in wherever they put all those data centers in. And I think this is going to continue to kind of build and do a whole lot better. And it's kind of one of those needle in the haystack, people don't pay attention to it kind of plays. But I was on vacation last week so I got to research a bunch of stuff. And so that's kind of what I did. In fact, I even threw Jeffrey a couple of things while I was on vacation last week, trying to figure out how to invest in some other places. Um, just because a lot of things are private. You can't get into them, and a lot of companies you get out there and you go, these are all private equity, and you can't do anything with them. But there are some people that kind of dabble in some of those. So this is another thing I was looking at was on the water side of things, and it just so happened that lo and behold, XYL's earnings came out. I guess it was a couple of days ago, and I didn't realize that last week. I was just kind of looking at those things, but I think these are some stocks to kind of look at and start thinking, hey, if all this stuff does grab hold and they start doing these data centers and these nuclear, plants, probably more SMRs than anything, but if they can start doing all of that, then I think these two will probably end up doing really well.
So I like that a lot as kind of like a backdoor picks and shovels play. We have these mega trends, nuclear and data centers, but obviously like the big run up in nuclear, and we've had Oklo in the portfolio
Oh yeah.
forever now, but some of those big run ups have already happened. So yeah, so water infrastructure, ITT and XYL, love that,
Yep.
kind of a backdoor play to target these mega trends.
Yep. Yep. So, and they're not overvalued. They're not, hyped up. They're not, nobody talks about them. And those are the companies I like to kind of get into, is the ones that haven't been hyped up yet or anything like that, until somebody out there says, hey, this is coming up on my scans, and everybody starts, kind of jumping into it.
So you like just a buy and hold here? Anything more aggressive with some
Yeah, I mean,
options
and
or?
they're both kind of expensive. I mean, so to say. I mean, both of them are like around. I mean, I think ITT is around 160, XYL is around 145, 144, something like that. So, I mean, if you want to dabble in them, I know people don't have no thousands and thousands of dollars, but you can buy, 10 shares of each one of them, and that's great. If you want to do options on them, they have monthly options on those things. So you can go out, maybe do the January leaps and kind of see how they do for a while. I would do at the money or in the money leaps on them, but they're going to be kind of expensive. So it might be cheaper to buy the 10 shares than it is to buy a call option outright. So, but I mean that's the thing you have to. I don't know what people's accounts are like, so I would, but I would be looking at the long side on these on a longer term basis, definitely.
Evan
All
throwing a
right, well
few extra tickers in the chat here.
there we go. Yeah, so this is a fun thesis, guys. I like this. I might get in on this myself. Yeah, backdoor play for picks and shovels, backdoor play, whatever you want to call it. And let's see you guys. I put the tickers ITT and XYL in the chat. Jeffrey added some more CNM, MLI. So let us know if anyone's getting in on that. But definitely a cool opportunity there. So I got one for you. I won't bury the lead, and Jeffrey and Jeff, feel free to bang up this thesis. But Novo Nordisk, literally, I think changed the world. I don't think it's an understatement. Just about anyone I know who was trying to lose weight is using this stuff. They brought Ozempic, Wegovy to market, the GLP-1 agonist class of weight loss drugs. They seem to really work. We've had this global obesity epidemic. I've struggled with it personally after having my kid. It was a miracle. My wife lost the baby weight instantly, and somehow I managed to pack on a bunch of pounds. So yeah, Novo Nordisk was this miracle story with their Ozempic drug, shot up, soared, I think, to about just a massive valuation. And then over the past year, down 63.5%. You can see it right there on the screen. So it soared to these incredible Ozempic heights. Now, like the miracle weight loss drug, it is losing a lot of value. Mark in the chat says GLP-1 works. I am 5 months in and 112 pounds down. Congrats, Mark. That is awesome. You must feel amazing. Now, the problem is the market was flooded with competitors. You have tirzepatide from Eli Lilly, and then what's really hot is these compounded drugs that are made sort of in a legal gray area. Well, I guess it's legal, but a lot of these places are selling these compounded drugs that are basically the same thing, but because of this loophole where they're made custom, you don't have to get the brand name Ozempic. So that's what's
Well,
banging up the price. Yeah,
well,
you go,
okay, so
Jeffrey.
the loophole was that while it was an FDA designated shortage, they could produce it in a compounding pharmacy as the patent outlined. Now, FDA took it off of shortage status, and that's where like Hims has gotten in trouble with NVO, and that's why they're button heads right now, is because NVO is like, hey, you can't produce this anymore. You can't sell it anymore without a deal with us because we own the patent. And they're like, no, blah, blah, and so it's turning into a legal type battle a little bit. And I feel like that's why Hims is pushing up the highs, but NVO is pulling back. But Lilly seems to be holding up better. I tend to go where strength is and kind of avoid the pullback. You may see opportunity in the bigger pullback, but NVO is obviously getting beat down while Lilly, with their Mounjaro and Zepbound, is holding up better, only down about 22% off the highs there from last year. And Lilly might have the better opportunity. So that's just my 2 cents on it. And you gotta keep the whole perspective in what's actually going on with the compounding pharmacies. And they're trying to change one molecule so they don't fall under the patent and still be able to sell that stuff too. One little atom in the molecule can change the effects too. So it could work, could not work. I don't know.
Yeah, and Mark in the chat who said he lost 112 pounds is using Mounjaro, so that is the Eli Lilly one. Maybe a big opportunity on Lilly as well. I mean, to me, the compelling thesis for NVO is it probably got, or certainly got overvalued on the Ozempic hype train. But people forget this is still a big pharma giant. They have all kinds of other business lines and patents and drugs. So while it got overvalued because of Ozempic, now it may be getting undervalued because of Ozempic. And, it's just this is still a big pharmaceutical company that's been around forever. I remember listening to the radio when I was a little kid, and Novo Nordisk would advertise on like the local Washington, D.C. NPR station. So I think that's kind of this is more obviously of a macro thesis, but to get a major pharmaceutical provider, even if their blockbuster drug isn't so much of a blockbuster anymore, to get it at this kind of a discount, I kind of like just a vanilla long here.
Yeah, it's actually at the right now it's the price to sales price. I look at price to sales because you can't fake sales. Their price to sales ratio is at the lowest level it's been since before 2020. So that does provide some sort of value there. Obviously, not being priced for perfection anymore, and back down below 8 looks like on the forward-looking price to sales, and that actually it's down to 5. So that may provide giant opportunity for it to recover, as you say. I don't know if we're going back to all-time highs anytime soon without some sort of new push for like Medicare approving their products, but as long as we're sitting here at a 5 price to sales, that's opportunity to go back up to the historical kind of 8 to 10 where it usually sits.
Yeah, and I think I kind of like just a vanilla buy and hold here. I was looking at the options chain. They're a little expensive. Obviously, it's kind of a big stock in the news. Ozempic's a big news story. And it does, someone pointed out in the chat, they do have a nice dividend. I think, let me pull it up to get the exact number. So yeah, I don't hate just a buy and hold here for a long term. I gave that out to my computer's on the fritz. I don't know if one of you guys can pull up the NVO dividend, but yeah, I don't hate this as like get a pharma giant that's paying a nice dividend. I think it's over 3%. Just get it at
Yes.
these lows and hang on for a while.
2.4 indicated right now.
Okay, 2.4. All right, I was a little optimistic. So, and then maybe Eli Lilly, by the same thesis, could be a good buy as well. Yeah, Reggie
Yeah.
in the chat says dividend is not bad. Mark in the chat says my doctor wants GLP-1 in the national water supply to help cure the country.
Have to talk to RFK about that one.
Now, the other interesting thing about GLP-1s is it might be an anti-addiction medication is one of the areas that they're expanding and looking at for people that are addicted to substance abuse problems and stuff like that. GLP-1 is being experimented with to break that addiction, and so it might have anti-addiction properties, which it's actually a compelling, interesting future use for this kind of drug. So.
I mean, yeah, a lot of people are skeptical. They're waiting for the other shoe to drop. They're saying, what'll be the long-term effects? But this class of drugs, I believe, has been around for over 30 years. It was mostly used for diabetes and some edge cases. So I'm cautiously optimistic. Also, frankly, Mark may have been a little tongue-in-cheek when he said they should put this in the water supply, but if you look at, I mean, I've seen like the obesity epidemic, and again, I don't say this judgmentally. I've gained a lot of weight myself around a few years ago, slowly taking it back off. But the cost to the economy because of the obesity epidemic have been high. So this could honestly be really good just for healthcare and the country overall. So I might be with you that if we can get this out to everyone, and I think there's even some real impact on like population level obesity numbers thanks to these drugs. So yeah, I think it's probably a good thing, and let's snap up some shares in the companies doing it.
And one of the things we've been talking about on Tuesdays with Jack and I is selling, puts out to pick up that good deal. You can pick up a 45 for September's expiration, September 19th, 2025. You can pick that up for around $1.75 credit right now and get paid to purchase NVO at 45, which is slightly below,
Oh, I like
$3
that.
below the current price plus the extra $1.75 you get paid to wait for that. And or you could go, if you want to be more aggressive, you could go slightly in the money at 50 and get paid $4.30, looks like right now. And so that would bring your cost down to roughly 45.70 for the shares, which is still almost $3 below the current, or $2.50 below the current trading price. So either way you wanted to go, it's still a way to get paid to wait and buy that stock if it stays depressed like this through
So this is
September.
a selling a naked put, Jeffrey.
Yeah, or cash secure put, whichever way you want to look at it. But yeah, it'd be you just sell the put and you'd be agreeing to buy those shares at 45 or 50, whichever one you chose to do out to September, September 19th, 2025, are the numbers I was talking about there. So
So you
that's
obviously got to be prepared to buy the stock if that happens. But yeah, maybe that's a strategy I'll add. I'm long it a little bit, but yeah, that's kind of a nice thing to add if you do like this NVO thesis.
yeah, I mean, like we've been talking about with Jack, $4,500 would get you 100 shares at 40 at the 45 strike. So you got to have $4,500 in your account if you're at some place that doesn't do margin. If you are at a margin place, you're looking at 20% of the cash required to hold that put. So you're only like that gets down around $1,000 to hold on to this 45 strike, and not too bad with a $175 potential return there.
So it seems like we got Jeffrey's buying. What do you think, Jeff? You like this NVO thesis? Maybe Eli as well?
Well, there's some areas I don't invest in, and pharmaceuticals is one of them.
Okay.
And the only reason for that is, I mean, just like Novo Nordisk here, I mean, the big hype was here's the big GLP-1 thing. Everybody jumps into it, and now look at it now. And that's just the way pharmaceuticals are. They hype them up, they pump them, and they dump them. And it's just they're pump and dump stocks. And that's the one thing I don't like is pump and dump stocks. That's just pharmaceutical stocks are all like that. And so
Yeah,
I don't care. I mean,
100%.
I don't have a problem with people investing in them. People can buy them all they want to. They have some of them have really nice dividends. I get all that. I just don't like pump and dump stocks, and that's what pharmaceuticals are. They get something at the USDA, it gets approved, they jump them up. Everybody's all happy for a month or two, and then they just start selling off and dumping off because they don't have anything new in the pipeline. And that's just the way they work. And so I just avoid them like the plague. But
Well,
it's
and
not a good
I
idea.
I said the term blockbuster, so really, and that's a common term in pharmaceuticals, blockbuster drugs. So really is like Hollywood, like Jeff was saying, you got to have your blockbusters in the pipeline. They'll be real hot for a minute and then dip back down. But I mean, I think for a mature pharma like this, I like catching this falling knife. Matt is asking, I think Jeffrey, to your idea about
I
selling
think that
puts
was
on
the
this.
September 19th options.
Okay,
Right there. I wrote in
September.
the chat.
Oh, great. Thank you, Jeffrey. So, great session today, guys. A lot of fun filling in for Alex and chatting with you guys. But the big news story we haven't touched on as much is gold is popping today. So, let's get into that. All that glitters is gold. I'm not sure what I pulled this chart a couple hours ago. So, but yeah, let's get into it. What kind of opportunities do we have on gold right now? Especially if we are expecting a pullback in SPY and yeah, and let us know in the chat, by the way, if anyone got in on gold like before the start of the year, because that was an amazing trade if you got in early on that.
Well, even in what was that thing called, Jeffrey? Ask the Pros?
I
Yeah,
asked the
Ask the
pro.
Pros. Back at the end of 2023, I was telling everybody that gold was going to start taking off big time. And last year it was up, big time, and this year it's up again. I mean, that's just the way it's been going. And the funny thing is it makes new all-time highs, and then it pulls back $250, and then it turns back around and makes all-time highs again. There it is. Why it does that, that's just, I don't know. They just like to do it that way. Another thing that I've been kind of noticing is this, like the US people want to dump gold and the world doesn't. I mean, if you watch it overnight, the gold futures, they'll rally that thing up throughout the night, and starting about 6 o'clock in the morning, they'll just start selling gold off. And then it gets to the open, and then gold's down, and everybody's like, well, it was up. And they're just like, yeah, well, the US guys hammered it. But that's just the way the thing works. But yeah, gold I think, is still poised to go higher. Our debt isn't getting any better, right? So, and if this financial crisis happens, I'm throwing that one on Jeffrey. So, gold's going to take off. So that's just it. I mean, it's just going to take off and run. Everybody's going to be running to a very, very stable asset, and gold is it. I mean, just like I was showing you today, I mean, the dollar's weakening up. It's been weak. I mean, it topped out up there around 112 on the dollar index, and it's been just slowly coming down ever since. Finally broke 100. They went back up and tested 100 and didn't last very long, apparently. But that's the thing. I think as long as the dollar continues to weaken up, you're going to see gold continue to move higher. So, but yeah.
And Sybil in the chat says, got into gold in 2019. Best thing I've done.
Yep, it is. And it's
Yeah.
outperformed everything else. So why not? I mean, absolutely. Buy it up all you can. So it's very expensive now. I mean, it's hard to go out and buy an ounce of gold here at, 3,400 bucks an ounce. So I mean, but the one thing that's nice is they have quarter ounce and half ounce and stuff like that if you're wanting to do the bullion side of thing. To me, it's just easier to buy GLD. It's going to move with gold, and that's kind of what we do.
There
So,
does seem to there's something special though, and I don't have any bullion. I do have some jewelry for my wife that's solid gold. There is something special about, just holding that in your hand. I'm sure you know this, Jeff, but it became a very hot product at Costco. You go in and get your toilet paper and your giant thing of pickles and a thing of gold bullion
oh
for
yeah.
3,400 bucks.
Yeah, that's
So
what was incredible. I mean, Costco couldn't keep gold bars or whatever they had in stock, and people were
yeah.
just buying them up hands over fist. So, which I hate to say, I'm a Sam's guy. So, so But I mean,
Yeah.
that's the thing. I mean, everybody wants some gold, and I think that's why you've really seen silver take off here lately. I mean, it had the worst time trying to get above 35 bucks. I mean, between 32 and 35, silver just couldn't do it. And finally, it just took off. Well, gold was up at $3,500 an ounce. I mean, it's really hard to buy, an ounce of gold up there, but you can pay 35 bucks for an ounce of silver. And that's, I think, what people are doing. They call it the poor man's gold. And I think that's really why silver's starting to take off again. Now it's corrected back, with gold here. But I think silver has more potential than gold does in the run up. It wouldn't surprise me one bit that silver's going to have a hard time with 42 bucks. But once it gets above there, I think it's going to test the all-time highs up there. That 40, what was that, 49.85, I think it went to back in 2012 or whatever that was, 2013. But once it gets above that, I think, they're going to bust 50, and it wouldn't surprise me if we don't try to get up on a long-term basis, probably up to around the, 70, $75 area.
And I'll tell you,
Hey,
I'll, oh,
I was
sorry,
gonna
you
say,
go, Jeffrey.
speaking of Costco, they're selling 10-gram gold bars right now.
So 10 grams. All right.
Yeah. Hey,
Yeah,
I
and
mean,
we actually gave
it's
that
more
trade
affordable.
out,
Yeah.
uh that silver convergence trade back around 30 on the Alex Reed Telegram. So that was one of mine. Proud of that one. Yeah, let us know if anyone got in on that. Mark in the chat says, back in the 1980s, I worked in South Africa and was paid in Krugerrands into an
Yeah.
offshore bank. 3 years of pay still sitting there. Mark, you sound like a real interesting guy. I hope you keep showing up to these shows. I don't know if you're doing military contracting or something in resources, but Mark, love that story. Um, give us some context. So I guess Jeff, the argument against gold, and one I made myself, is always it's like, well, it's a great hedge, great for jewelry and art, but there's no yield. The one thing with SPY is you get your yield. Obviously, with dividend stocks, you get your yield. So there are some ways to sort of play gold, not just. And we do like buying and holding, but there's some ways to actually generate some yield out of it or some income out of it, right? As well.
Well, I mean, you can get into, gold stocks. You've got the AEMs and all that's Newmonts and all that stuff. And of course, those are companies. They pay dividends if you want to do it that way. The problem with those stocks, in my opinion, is they all have a CEO and they all have earnings. Well, gold doesn't. It doesn't care. And it doesn't care what the S&P does. That's one thing that's really nice about it as well. Um, it's going to do everything based off of a totally different animal. And just like today, the S&P dumped off, and here's gold up here at 3,400 bucks an ounce. It rose about 1.5% on that same move where the S&P dumped, the dollar dumped. Well, gold's up. And I don't see, I mean, nothing goes straight up at all. And it never anything goes straight up, unfortunately. But I think just the corrections along the way, we can end up getting paid. I mean, yesterday when we got into that one trade in gold, I mean, I was thinking, well, we'll see how long this one takes. And boom, inside of a day, I woke up this morning and saw where gold was, and I was just like, well, and then of course the news came out and it shot up, and I was like, well, we'll be getting out of that right at the opening bell, and we did. And so, which is really, really cool. And I always want to, I mean, gold, the trend is up and you can't fight the trend. And if you're looking for a market that corrects back and then goes up some more, gold does a real good job of that one. I mean, it jumps up, makes highs, it pulls back, a couple $100, flips around, makes highs again, and that's just its pattern. And this time of year, July into August, gold and silver have a tendency of just consolidating and all that good stuff and pulling back, and that's not unusual at all. And lo and behold, it was doing that until, they struck a fire underneath that thing and caught a bid this morning and really shot that thing up. Now the question is, can they get back above 34 and a half or 34.50? And if it can, fine. But we'll be patient and watch and wait and see kind of what happens.